Right, welcome back. And, that time of the show where we bring in a market expert, and who better to talk about markets than Herald van der Linde. Needs no introduction and has a great lens into how not just Indian markets, but markets across the world, especially in the Asia-Pacific region, are likely playing out. Herald, great chatting. Hi, this is Harsh here. Herald, let me start off by understanding from you your take. Can growth surprise on the upside? You've given a target of 94,000 on the Nifty by end of 2026, largely driven by growth. I'm trying to understand, can India growth, in your opinion, surprise on the upside? Is that what you're really penciling in?
Not completely, but I think India growth could surprise a little bit on the upside. What we've seen is that the expectations of growth have really come down in India. At the beginning of this year, people were talking about maybe 18% growth in India this year. At the moment, we're hovering somewhere around 8 or 9%. And it looks at the moment that the numbers that are coming in the reporting season are doing a little bit better than expected. So it could be that there's a bit of an upside surprise. And I think next year earnings are going to be a little bit better than what it was this year. So it could happen, yes.
94,000 on the sensex, of course, not on the Nifty. Yeah, that's my error. Talk to us, Herald, about the earnings recovery at play, and what will be the key driver of that. Margins have started to come under pressure this year, in this financial year. They were under a bit of pressure last year as well, but we're seeing visible pressure this year. Do you believe that it is going to be margin-led, the earnings uptick or the earnings surprise, if that were to come through? Or is it going to be top-line-led? Or is it going to be both? Are both engines going to fire, in your opinion?
I think it's going to be both. The top line, I think, is because we're going to have GST is changed, right? So that supports some of the consumer companies. Some of the consumer companies, in particular the staples, will also benefit from lower input cost, raw materials, and these sort of things are coming off a bit. In the banks, I think you're going to see a bit of margin improvement, so the story is slightly different there, and also asset quality could improve. And yeah, depending a bit on the currency, but also we think actually the IT sector could see some demand returning and things a little bit better as there. So they're going to be for different sectors, sort of different drivers. But the story is that the expectations are really low at the moment, and that the earnings could do a little bit better than what they've done in 2025 as we go into 2026. But that, I think, is not the only story for India. It's also a story whereby regional funds are going to shift. But if we look at earnings, yes, I think the earnings picture for 2026 look a little bit better, but it's, depending on the sector, a bit of a top line or a margin story.
Herald, hi, afternoon. After a period of relative underperformance versus its Asian peers, how are you seeing the Indian equities and Indian portfolios stack up when it comes to the preference of foreign investors? Because yes, we've seen very muted investments from FIIs, but that seems to be changing a little bit, because now we seem to have started to gain a little bit more of FII exposure. Do you think that trend is sustainable right now?
Yes, I think this trend is only just starting, actually. This is why we upgraded India about, a month ago now. What has happened is that people in India look at China and say, can India perform if China performs? Because the feeling was that if people buy China, they're going to sell India, or vice versa. I think that dynamic has completely changed. China is going up because locals are buying it. The foreigners are buying Korea, Taiwan, Japan, because of AI. And the story here, to a large extent, is that I think you're going to see a shift from AI into markets that don't have AI, and that is, amongst others, India. If you look at, for example, the holdings that portfolios have in Taiwan and Korea, that is really a stretch. The average Asian portfolio has got 10% in TSMC, the largest stock in Taiwan. They can't really buy that much more. Hynix, the second largest stock in Korea, is now the second largest overweight position in gem portfolios as well. So they can't really buy that much more. And I think also AI has been a real good story into 2025. I think that might change a bit into 2026. And therefore, the shift would be, where else can you grow? What other growth stories could there be? And I think India is simply a good example of that.
Herald, you did speak about AI. Now that we're at the starting journey of AI and India seems to be picking up steam, and that is what is making investors attract towards India. But tell me, Herald, do you feel India is lagging too much far behind when it comes to the AI race, or do you believe that we're at par at least with our Asian peers, if not the American side?
No, I think at the moment the AI story is really a story between the US and China. Even Europe is not where it wants it to be. And that story is, if we look at the companies that drive it, it is a few American companies, some Chinese companies, and of course, you get the Taiwanese and the Koreans that are sitting there in the middle as well. So that's really where the story is developed, and these stocks have done phenomenally well. The problem, as I said, is that, excuse me, the problem, as I said, is that most people have really, they're up to their noses in these stocks. I mean, their weightings in the portfolios are really, really high. They can't really buy so much anymore. And what we now need to see is that there are other stories developing in Asia. And I think there are. And I think actually India is going to be one. So gradually we're going to have a shift from, okay, if AI story is played out, we've priced it in markets. I'm not saying that AI is over. It's just the story's been priced in. Then they say, what other growth stories are there in Asia? Now, last year, the story in India, the growth story was not fantastic. It was disappointing, right? And the numbers are starting to come down. But I think next year, as the earnings are going to look a bit better, they're going to say, hey, there's a story in banks and maybe in IT and the consumer sector in India. Why don't we allocate some more money to that? And I suspect actually that very early money, that relocation from North Asia, not so much China, but North Asia into India, has only just started.
And so we've covered India versus China, we've covered the FIIs and the trends around it. What are those India stories to pick up on if FIIs were to start buying? Herald, let me get that out of the way as well.
Yeah. I think there's a couple of interesting stories in India. There's always the consumer story whereby formal retail gains over informal retail. And this is now being supported by your GST taxes. They're coming down, so that allows that to fester as well. A second story, and this is in particular for the staples, your input prices are coming down. You see prices for all sorts of commodities and some of the oil, for example, coming off. So some companies might benefit from that as well. I think there's a story with lower interest rates. It probably means that the banking margins can expand as well. And if you see a bit of a recovery in growth, your asset quality in the banking sector is going to be less of a concern as well. So net that I think would put some of the banks into a better light as well. And then there are, as always in India, these idiosyncratic stories, small companies that have a particular niche in particular areas that I think are just that I found really interesting actually in India. And these sort of stories, they will bubble to the surface as well. People will start to look at those as well again.
Right, okay. And Herald, in terms of valuations, now that, yes, we have that government push on the GST front, the RBI front, you have lots of liquidity in the system right now, and these are some sectors that you're bullish on. But what about valuations? Because even despite the recent slowdown that we've seen in our markets back home, markets still continue to be slightly overvalued. Are you comfortable with these valuations, and would you be an investor at this point?
So India valuations, we have to understand, are always higher than elsewhere in the world. And there's a couple of reasons for it. First of all, Indian investors, local investors, can't just take all their money out. So there's a sort of hothouse effect, if you want to put it like that, that drives valuations higher. We see this in onshore China as well. Secondly, Indian companies are generally much more profitable, so they deserve a higher rating as well. But if you then see at the relative valuations, India's come off, and Korea is up 65%. So if you look at the relative valuations, India versus Korea, India versus China, actually India is starting to look to offer value again. Yes, it's more expensive, but the level of expensiveness is really narrowed enormously. So I think valuations are not a major concern anymore as they were, say, 12, 15 months ago in the middle of in 2024 when valuations were really high. So I don't think it's a major issue for the market. It's not a major overhang for the market at the moment.
Herald, again, pointing focus to macro and global macro. Two pieces. One is you've got US tariffs, which is still a bit of an overhang. I mean, and the settled position, at least with most of the analysts we're speaking with, is it's not a very big deal breaker, at least for India. So that's one. But also talk to us about this US government shutdown and what second order impact that could have on Asian markets, especially India. You know, when you're combining both of these, how much of an impact can that have on the Indian markets is what I'm trying to get to.
No, both these stories are really important, big stories in the world. But for the equity market, sometimes they're not as relevant because, yes, there are tariffs imposed on you, but the number of companies that have direct exposure to that is actually fairly limited. Also, there's sometimes a lot of exceptions that you have to look at. It is negative, but it's not as negative as the headlines would suggest. And it's the same with the shutdown in the government, although they're now reopening it, right? But until the end of January, from what I understand. So that is a negative on growth, that shutdown. For the moment, there's a sort of reprieve, so that's a positive. But again, that is a really domestic US story. I don't think that impacts the story of exports to the US that much, to be extremely frank. You can look at that. We've had tariffs imposed on China, but actually Chinese export growth has been pretty good so far this year. We've now seen that ASEAN is now the biggest exporter in the region to the US, not China anymore, because yes, they've been impacted by tariffs, but the tariffs were not as bad, and there's a lot of exemptions for that particular region. So it's sometimes the story is a bit more nuanced than what the headlines suggest. I'm not so worried about the tariffs in India, actually. What I really look at is growth, what's the direction of interest rates, the GST taxes, fiscal policies, and these sort of things to turn the economy a bit around. And I think the earnings profile, eventually, that's what pays us as investors in companies. These earnings in 2026, they're going to look better than they were in 2025.
Point taken, Herald. Herald, let's also talk about the tech space because there's just so much chatter around it. You've spoken about consumer, you've spoken about financials. What of IT? No. Now, again, the entire US, the tariffs plus the shutdown comes into play. How does that impact IT in your opinion? And where are Indian IT companies placed in this new AI order, if I can call it that?
Yeah. I think the Indian IT companies have to take a very close look at themselves and say, what are we doing now that can become obsolete in the next couple of years because AI can do that? And I suspect, of course, they do this already. So they need to reposition themselves. India has done a phenomenal job, I would say, over the last 25 years or so by building up this IT industry and effectively becoming a sort of an outsourcing platform to the rest of the world. They've done a really good job in that, and they've moved up the value adder ladder. I mean, 25 years ago, it was checking if your computers wouldn't stop because the internal clock might stop it on the 1st of January 2000, right? That was the Y2K bubble. Now they take care of whole processes of companies that have outsourced back operations and these sort of things to the Indians. So really good job, but AI is a serious threat for, in particular, I would say for IT industry. So they really need to take a good look at it and say, what is a risk to us? And if we can implement AI, can we make sure that the people that do these particular jobs now, can we apply them somewhere else to grow our business? Because eventually, I think AI will allow us to grow businesses and markets further. And so that's what they have to figure out. That will be a difficult process, and some of the companies will struggle with this more than other ones do. And it's really up to the individual stock analyst to say, I think these companies will do well or not. But my suspicion is that you have a bit of a weaker currency support already. Growth will probably come back a little bit next year as well. That actually the IT sector will look okay-ish. It's not that I'm overly excited by it. I look at banks and consumer, maybe as sectors that I think is more interesting in the very near term, but I wouldn't rule out the IT stocks whatsoever.
Okay, Harold, on that note, what do you think could be some of the key themes that drive the next phase of growth for the Indian market? So could it be formalization of retail? Could it be the infra push coming in, or renewable energy, or could it be something entirely different?
Well, the great thing is that your markets are so diverse that all of these themes can play a role, right? And I think, for example, formalization of retail, that's going on for the last 25 years already, but still have an enormous long way to go. And you have these sort of interesting companies, sometimes in the finance sector as well, that become platforms where people can buy insurance products and all sorts of other financial products. So these sort of companies, kind of innovative, smaller finance players fit into that category as well of sort of formalization of the financial sector, if you want to put it like that. So I would look at these sort of stories as well. And the valuations in some of these sectors are not necessarily a particular stretch. And as I said, also for the larger banks, as the economy recovers next year, you'll have banking analysts saying, actually, we're not so much concerned about asset quality anymore. Certainly, the amount of provisions that they have to put in place is going to be reduced, and that improves the profitability for some of these banks or financial institutions as well.
How do you look at valuations of some of the new age tech companies? We had the most recent listing today. I'm not sure how closely you track something like a Lenskart, but I'm just trying to bunch all of them together, trying to ask you Zomato, Swiggy, and the like, and no names in particular, but just that entire pack, which is typically valued at market price to sales. So trying to understand from you whether you believe that valuations have run ahead of themselves. You have a great grip of how global markets have worked over maybe the last 20, 30 years. How do you see stories like this unfold, and how do you value them? Give us a sense.
I think you have to be very careful when we start to move away from looking at profitability of companies. We've seen it so often before that particular pockets in markets can be IPOs, smaller cap, mid caps, can be particular sectors. They move away from fundamentals. This is just a normal event that happens in markets all the time. But at some point in time, there's a reset to what is reality. So I've seen so often in China, in Southeast Asia in the past, we've seen it in India, pretty much all markets actually, whereby people say, oh, we don't look at profitability, it's about market share, it's about volumes, it's about eyeballs, it's about sales, price to sales. I think you have to be careful with this. I understand that sometimes for maybe a year and a half, stocks can rally and go higher. And then they say, well, Herald said, don't look at profit to sales, but look at these EV to sales. But look at these companies, they continue to go higher. But there will be a reset at some point in time. So you got to be really careful with that. Either you're a short-term player and say, okay, I'll take that risk. If you're a longer-term player, I would be extremely careful with these things. But that notwithstanding to that, there are industries that grow fast, and you want to play those companies that can gain market share or become dominant in a particular space. But these companies should not forget to look at cash flows, because if something happens in the world whereby suddenly cash dries up, and we've seen this in the .com in 2000, right. You had companies in the US that suddenly couldn't get money anymore and they fell over. So be careful with that.
Right, absolutely. Point taken, Harold, and it's been an excellent conversation. Thank you so much for your time.
Thank you very much.